Welcome back to the deep dive. Today we're really plunging into it. Imagine a single day, maybe even the next 24 hours, that could genuinely reshape the crypto world. That day is pretty much upon us. We're looking at September 12th, 2025, today, but really focusing on what's lining up for tomorrow the 13th. We've got this really comprehensive crypto market analysis report, and our mission today: cut through the noise. We want to pull out the crucial stuff, the short-term bumps, the long-term impacts, the big events happening right now that you need on your radar. We know it can be overwhelming, so we're aiming for clear, concise, impactful insights for you. Okay, let's dive in. Bitcoin first, naturally. It's kind of leading the pack, as usual. The report starts there, looking at Bitcoin, aiming for that, well, ambitious $120,000 mark, big psychological number. But here's where it gets interesting, maybe a bit concerning. The report flags a potential fatigue zone. It's lurking around $115,000, and it sounds like it's more than just a line on a chart.
Oh, absolutely. That's right. This $115,000 fatigue zone, the report really emphasizes it's not just simple resistance. It's like a meeting point for different market forces. You've got significant profit-taking pressure. Think about early investors, right? They bought way lower. Now they see huge gains, and they're thinking, maybe it's time to lock some of that in. A sort of natural ceiling forms. But the report also points to, well, a cluster of institutional sell limits right there. Big players de-risking. So getting through that, it needs serious buying power to soak up all that selling. It's a real test of conviction, not just momentum.
Gotcha. So for you watching Bitcoin's immediate moves, this $115K level it's a real battleground. Psychologically, technically, it really feels like where the rubber meets the road for the next, say, 24 to 48 hours. Continued climb or a pullback. The report frames it as a critical inflection point, doesn't it? Not just a minor hurdle. Okay, so Bitcoin has its internal struggle, but then the report zooms out and it highlights these huge external forces pushing and pulling. We're talking the US dollar index, the DXY, and of course the Federal Reserve, big hitters. Right now, the DXY is at 97.55. The report notes it's kind of stuck, moving sideways between 97 and 98, almost coiled.
Yeah, coiled is a good word. Might like seem dry, just an economic indicator, but its impact on crypto can be massive. What's fascinating, and the report really digs into this, is that inverse relationship. Stronger dollar, often weaker crypto. It signals risk off, Money flows out of things like crypto and into safer havens. The report's pretty blunt here. If DXY breaks out, surges past 98, that could be a major headwind. A strong market correction could be on the horizon. Which leads to the big question. What if the Fed's actions actually cause that DXY surge?
Right, the Fed. Their shadow looms large.
Yeah.
And the report flags the big event. Tomorrow, September 13th, 19 Plan 00 UTC. The interest rate decision. This isn't just background chatter, is it? It's front and center.
It's absolutely front and center. And the market's pretty much priced in an expectation, a 0.25% rate cut. So this sets up two very clear, immediate scenarios, things you really need to be ready for. Scenario one, the optimistic one. Fed delivers the cut, DXY drops below 97. What happens? Bitcoin could push past $115, maybe even test 120K. In altcoins, they'd likely rally hard. But then there's the flip side, the cautious scenario. What if the Fed holds no change? And maybe the DXY reacts by jumping above 98. That could put immediate, serious pressure on crypto. Bitcoin might drop back to $110, maybe lower. Altcoins could see even sharper drops. It feels like the market's balancing on a knife edge, super sensitive to any surprises.
Wow. Yeah, a knife edge is right. Okay, so we've got these huge macro forces, but the report also looks at something more direct. Where's the money actually going? And these ETF numbers, they're pretty eye-opening. Significant institutional cash flowing in. I mean, $552 million into Bitcoin ETFs for the fourth day in a row. That's huge, right?
Yeah.
Consistent.
It's definitely huge. And consistency is the key word. Almost $500 million, day after day. The report suggests this isn't just speculative froth. It's deeper, structural. Institutions are actively treating Bitcoin like a real asset class now. And it's not just Bitcoin. Ethereum's also seeing steady ETF inflows 3 days straight. Plus, you mentioned that massive $1.65 billion investment into Solana. These are big commitments. It really points to a broader confidence building in digital assets, a kind of maturation we haven't quite seen before.
That's a really strong signal on the institutional side. But what about the average investor, the mood on the street, so to speak? What's the report saying about the overall market psychology?
Well, it looks at the fear and greed index. Right now, it's sitting at 54. That's pretty much neutral. So the market isn't wildly euphoric, but it's not panicked either. It's balanced, maybe a bit cautious. The report notes that this neutrality means there's potential for a big swing either way. And interestingly, for you maybe looking for entry points, if that index dips below 40 into fear, historically that's sometimes signaled a good buy low moment when sentiment is really down. Something to watch.
That's practical. And speaking of market dynamics, Bitcoin dominance. The report mentions it's around 67%, ticking up slightly. Now, for investors, that dominance figure matters a lot for altcoins, doesn't it? It implies capital shifts.
It absolutely does. A rising Bitcoin dominance, like we're seeing now, often means liquidity gravitation. Basically, money flows out of smaller, maybe riskier altcoins and back into Bitcoin. It's partly a flight to perceived safety, especially when things feel uncertain or Bitcoin itself is making big moves. And this can be tough for smaller projects, you know? Investors might prioritize assets they can exit easily if things get volatile. So yeah, while some alts might do well, others could definitely face pressure.
Okay, so this capital rotation, who wins? Who loses in the altcoin space right now? Especially with Dogecoin suddenly getting so much attention.
The report actually singles out a few potential winners. Meme coins, specifically Dogecoin and Maxi Doge, are expected to see speculative interest, mainly because of the Dogecoin ETF launching tomorrow, the DOJ e-ticker. The hope, or maybe the bet, is that this ETF brings in new money, creates buzz, just like the Bitcoin ETFs did. But beyond the memes, Layer 2 solutions for Bitcoin, like Bitcoin Hyper, are also highlighted. These are seen as having strong fundamentals. They're working on Bitcoin's scalability, a core issue. So that's a growth area.
Right, so capitalizing on hype for some and fundamental tech improvements for others. But the warning is there too. If Bitcoin dominance keeps creeping up, small cap alts could take a hit, a sharp one.
That's the risk, yeah. The flip side of that liquidity gravitation, when money flows back to Bitcoin, it gets pulled from somewhere, and often it's the smaller, less liquid altcoins. Their order books are thinner, less trading volume, so even a bit of selling can push prices down fast. The report basically advises caution with those riskier assets right now. Maybe stick closer to Bitcoin or Ethereum if you're concerned about volatility around these big events. It really highlights why understanding capital flow is so important for your portfolio management, being nimble.
Okay, let's pull back again. Zoom out from the day-to-day. What about the longer-term picture? Weeks, months ahead. The report touches on bigger trends, foundational shifts shaping the space.
Yeah, on the tech side, two main things stand out. First, those Layer 2 solutions we mentioned, like Bitcoin Hyper, their continued development and adoption is seen as really crucial for making blockchains like Bitcoin more usable, more scalable, solving fundamental problems. Second, and this is really fascinating, is the rise of AI blockchain projects. The report even mentions giants like Google supposedly exploring this space. Think enhancing transaction speed, security, decentralized AI. It's pushing the envelope for what blockchain can do long term.
And tech evolution always bumps up against regulation, doesn't it? The Dogecoin ETF, HAE, it seems like a key test case there. The report suggests if it succeeds, could that open the floodgates for other altcoin ETFs? That would be a huge shift.
It really could be a game changer. A successful Dogecoin ETF would set a precedent. It could show regulators there's demand, and these things can be structured relatively safely for investors. But, and it's a big but, the report wisely adds a note of caution. We have to watch the SEC's reaction very closely. Not just the launch, but how it trades, the market response. Their stance is critical. It's that constant dance, isn't it? Innovation versus regulation. And that dance is vital for your long-term view. Regulatory shifts, impact adoption, stability, everything.
Okay, this brings us right to the crunch time. Your action plan. Looking squarely at tomorrow, September 13th, the report gives some pretty direct advice on managing risk, navigating what could be a very choppy day. It's about preparation.
Exactly. Preparation, not prediction.
The report highlights 3 key events you need to have locked on your radar for tomorrow. 1, the Fed decision, 19.00 UTC. Expectation is a 0.25% cut. If they don't deliver, expect volatility, likely downside for crypto. 2, the Dogecoin ETF, DOJ, launch. Could boost meme coins, yes, but also add speculative risk, potentially wild swings. 3, U.S. CPI data, 12.3 UTC. Inflation numbers, if they come in higher than expected, that could boost the DXY, push it over 98, and put serious pressure back on crypto. Any one of these can move the market. All 3 together makes for a tense day.
Definitely tense. So given all that, what's the practical advice? What can you actually do tomorrow?
The report lays out a clear, sensible path. First, monitor the Fed announcement and Chair Powell's speech live. Every word will be dissected. Market reactions will be instant. Second, seriously consider reducing leverage before these events hit. If you're trading with borrowed funds, the report suggests pulling back. High leverage plus sudden volatility is a recipe for rapid liquidations. Protect your capital. And finally, prioritize liquidity. Maybe lean towards Bitcoin and Ethereum, assets you can move in and out of more easily. Be extra cautious with smaller, riskier altcoins during this peak uncertainty.
It really sounds like the overarching theme is risk management first and foremost.
That's exactly it. The report's conclusion is crystal clear. The market's in a very sensitive macro phase right now. Stringent risk management needs to be your top priority. It's about making smart, informed choices based on the known risks, not just chasing gains or reacting emotionally to headlines. Understanding these triggers, having a plan, that's how you navigate whatever tomorrow throws at us.
Wow. What a dive that was. We've covered Bitcoin's $115K hurdle, the DXY dance, the Fed's decision hanging in the balance, those massive ETF flows showing institutional interest, and then the future peak at altcoins, layer 2s, even AI on the blockchain. It's a lot.
It is a lot, but it's all connected. The market really is at a pivotal point. You've got these immediate macro triggers colliding with fundamental long-term innovation. Seeing how those pieces fit together, that's the key to making sense of it all, really, making informed decisions that align with your own strategy.
Absolutely. So here's a final thought for you, the listener. We see this rapid tech evolution, AI blockchain, layer 2s improving scalability, and we see the regulatory landscape shifting with things like new ETFs. How will you integrate all these insights? How will you adapt your own strategy to not just survive, but thrive in what's clearly becoming a more mature, institutionalized, but still incredibly dynamic crypto market? Definitely something to ponder. Thanks for joining us for another deep dive. We'll catch you next time.